Hello, everyone. Welcome back to Crypto Crayfish. Today, we're going to talk about all the Trump tariff craziness. We'll do some updates. We'll talk about things, and we'll talk about some market psychology because it's been a tough, dang 24 hours for market psychology. So, first, I just want to take a look at this CNBC article. I think it's a nice little summary of today. Dow nosedives 1,600 points. S&P 500 and NASDAQ dropped the most since 2020 after Trump's tariff onslaught. Now, most since 2020, notice that. That's skipping the 2022 bear market we had. So that's a pretty strong statement right there. We're going back to COVID times. And you can see if we scroll down, the S&P broad market index dropped 4.84% and settled at 5396, posting its worst day since June 2020. The NASDAQ I have been looking at, it's now down more than 14%. You've got shares of multinational companies tumbled. Nike and Apple dropped 14% and 9% respectively. On Thursday, the president acknowledged the market sell-off and likened the implementation of tariffs to an operation, like when a patient gets operated on. The markets are going to boom. The stock is going to boom. The country is going to boom. And the rest of the world wants to see, is there any way they can make a deal? Trump said. So traders had hoped Trump's tariff plan would use a 10% rate, or at worst a 20% rate as a cap, not as a minimum starting point. Rates will end up being much higher than what investors had expected for many nations. In a lot of ways, it's kind of worst case scenario we're seeing right now. And if we don't hold 5,400, a lot of people see us moving towards 5,200. So I'm going to close this window and we'll talk about my thoughts and my things because you don't need me to just read you articles, but I did think it was a nice little summary. Hopefully that didn't glitch too hard. We're going to go over my thoughts now and we'll talk about some of what I think is going on. I first wanted to start with, I am aware, guys, it's not easy to lose money, right? And that goes for anything, whether it's, gambling in Vegas, whether it's paying for something super expensive, but even more so in the stock market because it feels so uncontrollable. And it's tough, guys. It's not been a fun day to be in the stock market or to be in crypto. I mean, crypto honestly is holding up better than I would have expected. But definitely the stock market. Just so you all feel better, I was in Shopify, right? I like Shopify. Shopify is down 18% on the day. It won't even pull up the ticker because it got so hammered today. Nvidia's down almost 8%. Apple's down almost 10%. Some moves that are pretty major, guys. We've got the Magnificent Seven as a whole right now below 25% down. That's pretty wild. That's a full-on bear market for those guys, and those were our market leaders. So it makes sense that the rest of things are getting drawn down. You can look at the S&P here. The S&P's down almost 5% today, guys. That's not a normal thing that happens in stock indices, at least not for a long time. And so I think you have to look at, we're coming back towards kind of those August lows. Right now we're at that, kind of September bounce low. This is really where it needs to hold the line, guys. This is the major bottom that I think if it cracks below this, it's going to look ugly for a little while. But anyway, all this to say, people are getting fleeced, right? And that goes for most investors right now. These are the times that suck in the stock market, right? Because if you can imagine not being an investor, never looking at the stock market, and you're just still holding the same amount of cash in your bank account that you've always been holding, versus for The rest of us, especially those of us who are a little bit out on the risk curve, we might be down, 10, 20% of our net worth, depending on if we were in Magnificent Seven or whatever, in the past month. And that's hard. That's hard to deal with. And so I just want you to know you're not alone. A lot of people are getting fleeced right now, including people on Wall Street, to be fair. I mean, there are hedge funds with massive multi-million, hundreds of millions, even into billions and trillions of dollars of positions. And yeah, there's going to be some sell side people who are doing quite well right now. But remember, the majority of the time throughout history, stock markets go up. And so those people that are perma bears are going to get fleeced during the majority of time. So I don't think you should switch to becoming a perma bear. I think it's just a tough time to be in the market. I think try and harvest that piece if you can. Try and, if you've got some cash, start kind of incrementally putting it to work. I think that's a great thing. Find those things that you are hoping to buy at discounted prices and start getting pieces of them, because what people do is they say, oh, this is really, really scary. I'm going to wait till it settles out. And I can understand the sentiment of that, but oftentimes what people do is they end up just buying once they've already seen a large recovery. So I would buy on gnarly days to come. Today was a tough one just because it was hard to see if it was, there was really no relief the whole day. But yeah, I think starting to nibble is not a bad idea. It may not be the bottom, but at the very least, you're not buying the top. You're going to look back in a few years and probably be like, okay, those were pretty solid. And so that's what I would say. If you're a little bit more risk averse, stick to index funds, things like that. As for crypto, because I know we love crypto and we love risk, let's go look at some things. First off, Bitcoin dominance. We talked about it in our last video. It's breaking out, right? We look at the trend line still on here. I drew this massive bull pennant and I said, probably we're going to find a resolution pretty soon, and I bet it's to the upside. And here we go, right? We are moving aggressively upward on Bitcoin dominance. What that means is altcoins are getting hammered, okay? Like, look at Solana. Solana is back to 116 and hanging on by a thread here, guys. If it breaks this, we're going to head down towards 100 and maybe below if it keeps being a pretty uncertain environment. You've got Ethereum. Ethereum is not looked good all year, and now it's, putting in new lows on the year. And it's just not a nice chart, guys. I would not be surprised. Frankly, I think Ethereum on a USD valuation is headed towards like 1,500 and maybe down to like 1,200. But that might take some time, especially on a big Bitcoin drop. Like, Bitcoin is actually held up decently, and that's kind of weird. I think it just shows that, the market's kind of aware and has front run some of that move for tariffs on the Bitcoin side of things. I still think we're not done with the 70s. I still think there's gonna be another dip into the 70s in the next week or two. That's my best guess. I don't think we're gonna fully break our market structure at, lose 69K and close durably below 74K, which is the previous high we've talked about. If you're not aware of that, this previous high back last year is kind of our line in the sand for saying, okay, we can pull back to this 73, 74 mark, but if we start getting lots of cancel closes below that, it's likely looking like the top is in for Bitcoin. So that's what I would say. I don't think that's the most likely. I think we likely will, head back into the 70s at some point, but probably hold. But frankly, low 80s have been really strong. On a day where the stock market is down 5%, I frankly would have thought Bitcoin would be at 75K right now. So it could still be coming, or it could just kind of be balancing out a little bit, and people are maybe, maybe they're shifting a little bit out of equities and looking for some other things to buy. Or, maybe it was just one of those days where there was no crypto specific news and people focused on stocks. So that's what I think on those fronts. I think stick with Bitcoin until QE arrives. I do want to tell you tomorrow we are getting unemployment data, and Fed Chair Jerome Powell is speaking. And I think that could be a really interesting timing because, I don't think he necessarily directly will talk about the stock market. It's not really his thing. He says, that's not part of our dual mandate. Fair. But I do think indirectly he's going to address all this craziness that's been happening. I mean, people are really afraid, and you don't get, the level of liquidations we saw today without the Fed kind of being like, okay, how could we potentially look at stabilizing our financial system? Again, it's going to depend on inflation and unemployment. If inflation super spikes, which is possible with these tariffs, they might not be able to lower rates, but maybe he starts hinting at QE or some other stuff. It's going to be hard to tell. I do think, right, these tariffs are not good news, clearly. Potentially, I think the possible bull case scenarios I see are negotiations happen, they never go into effect, whatever. Like, for example, I'm not sure if you saw the headline, but the Senate actually blocked Trump's Canada tariffs. So rather than going into effect this week, they're not going to happen. And that's something that's not really being talked about in the news, right? That's something where I actually don't know how much of this stuff is going to end up going through. So I think that could be a potential bull case if there's negotiations, if things are blocked, whatever, then potentially, okay, we get some more clarity and we get much less tariffs than we're thinking right now. Or let's just assume everything stays and the tariffs are the way they are. I do think that's negative for sure for the markets, but I also think that will likely be something that is going to take a little bit of time. So I think you aren't going to see overnight necessarily companies having horrible earnings and some of that type of stuff that is more recessionary. Same with the inflation impact. I think you'll start to see it trickle in, but it might take a while for kind of the lag to go through the markets. And so I think there's potential for kind of a rally in that interim, but that's just my best guess. All I can say is, remember in these times, bull market scenarios and greed will come back to the markets as a whole, to crypto. I saw the fear and greed today is back in extreme fear. So keep in mind, we will oscillate the other direction. When exactly that will happen, I cannot tell you, but I do think these are better times to be on sides or starting to buy things rather than starting to sell things, right? Like, I think at this point, we could go lower, but I think a lot of the sell move could be priced in. And that's what I would say to you. I would say totally fine to be neutral or buying lightly. I wouldn't be selling aggressively unless you're like a hedging person who's trying to pick up a little bit of hedge in case your whole portfolio goes down aggressively, which is valid. Hats off to you if you've got a strategy on that front. So those are my thoughts. We'll keep chatting about things. I would say the only other thing to watch, the 10-year got absolutely crushed today, guys. This is pretty interesting, right? If you follow bond yields at all, the 10-year it fell aggressively during that first sell-off, and then we've been kind of range bound going up, and now we just got down to a new range level. And that could potentially be positive if some of these worries get removed. Same with kind of the DXY. You're seeing a very similar move where this actually moved down below 102, which it hasn't been below in a long time, guys. I mean, the last time we hit down here was September, October of 24. And even that was only briefly. Most of this last few years, right, we've been above this level. So now we're kind of coming into that lower range of this oscillation. And you can see that it's looking less likely. This does look more like a macro lower high for this cycle rather than something that was building towards potentially taking out this high. And I think that's a positive for risk assets, for global liquidity, for all those things. Again, it's just when do markets feel like there's not imminent fear on the horizon? All right. I will talk to you all soon. Please give me a follow if you haven't. Would love to see some comments. The freaking bots will not stop commenting on all my videos, and I keep reporting them. So it would be nice to know that there are actually real people watching these videos. Sometimes the motivation to do these is hard, especially on hard days, because it kind of just sucks and you want to isolate. But go see family, form a plan, do what you can. And, these are the risks we take to make returns. Potentially we can get fleeced for a little bit. Or for a long bit. But again, I think we're already a few months into that. So we'll talk to you guys soon. Thanks for your support and hope you have a wonderful weekend.